Hello, YouTube. Today we put in a massive gap. The question is it now a trap? As we've been noticing, gap up and gap downs have been really hard to predict, to be honest, because generally speaking, a gap up is for selling, a gap down is for buying. And on Thursday and Friday, that did ring true. When we gapped down, we bought it. When we gapped up on Friday, we sold it. But now today, as we actually look at our candle here, the bulls are 100% flexing. We actually have a dark pool print, which gives us a low of the day at 357.28, which is artificial, but we're just going to ignore that for now. And what I really want to look at is what happened when we actually get our first test. And what I mean by first test is we had a huge squeeze on Thursday. Where we found support was at 356.96. That is basically going to be our September low at 357.04. And now that we have today at 357.28, that is technically a higher low and a lower high, which gives us an inside bar. And the fact they're doing this dark pool, cuckery is what I like to call it, but I prefer to use the word that starts with F. Anyways, I'm noticing that there is a key area we have to pay very close attention to. It is going to be the close and the high going back to Thursday. Our high was 36751. Our close is 365.97. We closed over one, but we are below the other. And after hours, we're retesting that high here. So I was watching that area all day. And if we can get back above the Friday high, I think we're going to start going up, which would lead to what? Maybe the first impulse move of our bull market, or scenario two, which we reviewed on the weekend, and then TBD. Noticing that Netflix is up, I don't know, like 7% today. 6.7%, up as much as 9. Tesla cranking it higher today by 7. We talked about that too. So Netflix is going to kick off earnings after the bell tomorrow, and then we got Tesla as well. We also have Goldman Sachs, Johnson & Johnson pre-market, but we're going to focus on Netflix and Tesla because so far, what I predicted, again, not guaranteed, you don't get adjusting guarantee, but I predicted that we would get a positive reaction to these stocks. The question is, have they already gone up enough, or are they going to go big booms after they actually put out the releases? So few more things to look at here. The title says, Bulls Flex, is it enough? The question and the reason why I'm not sure if it's enough is because we note here on the daily that we did poke above over the Thursday high. That is the most important price for me. Second most important price is going to be the Friday high, 370.26. And I say that because if you look here, we have a green line, a pink line, a white line, and then also a red line. If you're not sure what that means, it means support, pivot, important, and then resistance. You can see where they come from as well. The green line is going to be the 50 monthly. The pink is going to be the 200 weekly. We're not going to look at the monthly or weekly chart because that's why we put the levels on the chart here. Anyways, the white is 362, and that goes back to our June low. And then we got a red line, which is our July low at 371.04. So before we're able to think about making higher highs on the weekly, we have to take out these relative lows. And this is the relative low that I am watching. So right now we are between an important area and resistance after, again, technically with the dark pool print bouncing off our 200 weekly. And this is so important because if this scenario is going to play out, well, I would hope that if we're going to close near the high of the week into OPEX on Friday, we would have some kind of tail to show us that there was a true meaningful backtest. Other reason why I'm saying this might be a trap is because as we look here to our options flow for today, even though we have a bull tilt with 59% of options bought bullish and 41% bought bearish, the largest single order of the day is SPX for March of 2023 at 4,000, for $105 million. Woof! That's a huge order. And this pretty much aligns with when the Fed is supposed to be at their terminal rate. The terminal rate means when they're going to stop raising interest rates. So that's a very specific area for me. 4,000 is going to be in the money, which means they're buying. It's just easier to get that exposure than it is to go out and buy. Than short SPY outright. So for me, they're thinking all the way down here is what they're roughly looking at. If we do our 70 days out for the green box 1 versus green box 2, this would be roughly December. And then 1, 2, 3 months later would be March. So they're betting that we're going to be down here. Are they right? Drop me a comment and tell me what you think. These orders are huge. They are bigly. They're really big. Also, really important to note that Mike Wilson, one of the most vocal bears, is giving us some levels here. So Morgan Stanley's Wilson says US stocks can rally in the short term. Right, we're not going to read every detail here. We're talking about the 200 weekly moving average, which we're going to look at in a moment. So we got 2011, 2016, 2018. Every time we bounce off the 200 weekly and then reclaim it and don't look back. By the way, we've already closed below it twice. So if we keep closing below it, this is void. But if we can go higher, he said he would not rule out the S&P rising to about 4150, suggesting a 16% upside from its latest close. While that seems like an awfully big move, it would mean it would be in line with bear market rallies this year and prior ones. So note that area 4150. We'll look at the chart in a moment and tell you what that means. But then we also have a downside target here. So here he's talking about ultimately he sees the bear market bottoming around 3,000 to 3,200. So call it 3,100. So where we are right now, if we look at SPX, right, it's just 10 times bigger. So it's 3677. And as we look here, the reason why this is important is because he's pretty much telling us that there's about an equal amount of downside as upside from here. That's the first thing I want to point out. Second thing I want to point out, we're going to go back to SPY now, and we're going to look here at the weekly chart. And the reason why we're going to look at this weekly chart is just because, as we now know, we have a tail. Our low of the week is 35728. Is that what actually happened? Nope. That did not happen today. We look here in the 15-minute chart, gap and prop. So that's why I'm calling it maybe a trap. Gap and trap, gap and go, whatever you want to call it. That's a gap and trap. Low, higher, low, higher, low. But oh boy, that coil's getting real tight. As the coil gets tight, it's going to explode one way, upside or to the downside. We could ultimately fill that gap and come back down to our key pivot or the pink line. And the reason why this is so important is because we now also have like an inverse head and shoulders forming here. We have a shoulder, a head, and a shoulder right off of where? Off of the pink line. Let's go back to the weekly, sorry. Right back to our pink line at 35875, which goes back to our August 2020 high, but it is also basically our 200 weekly moving average. So as we look here, the reason why this is so important is because technically, if we look at this next week, next month, next year, we're not going to know that this was a dark pool print. It's just going to be there. So what's so important is that every previous time we built up pressure here on the weekly chart, we've always faded it into Friday. It's only Monday. There is a lot of time left on these charts. So where are we going to go? Well, Mike Wilson's pointing out a very specific area. He is talking about the 50 weekly. So now that we've carved out a bottom here off of the 200 weekly, off the 200 weekly here, I think the reason why he's calling 4150 is just because that's where we're projected to have the 50 weekly shortly, right? Call it by roughly end of October. That is where the 50 weekly should be. So what generally happens once we get stuck inside these averages is we just bounce around it, right? 50, 200, 50, 200, back to the 50. That's what Mike Wilson's calling for. I don't know if I agree with him, but I could see that scenario playing out. We have to form at least one weekly higher high before that's a possibility. And on the flip side here, I want to focus on one more thing because St. Louis Fed President James Bullard also left the door open for possibly raising by 75 at both the November and December meeting. That could give us what if we fade going into December and the market is surprised by this hike? That's what's really important to me. I would finally note that there's breadth, there's depth. Tesla's bright green. Netflix is bright green as well. Everything's up. It's like 90% of individual stocks are higher. I did want to go through a little bit more. I want to look at two more quick things here. So dollars down by 1%. VIX is down. Treasuries are down. We're going to ignore those. I reviewed those on the weekend. What I want to look at here is actually another signal for me, which could potentially signal a pivot. I'm going to touch on this a little bit more tomorrow, but this is the S&P 500 with stocks above their 50-day moving average. And right now, we've got 10.95 as of the close on Friday, which means only 1 in 10 stocks is actually above its short-term price. When we think about its long-term price, it's not that much better. It's 14% of stocks. And if we look back in time, every previous time we have carved out a short-term, a bottom. Doesn't have to be the bottom, just a bottom. 2016, 2019, 2020, 2022. We're all in that deep cut area. So is this going to be the turning point? I am not sure, but the final chart for us to review today is going to be QQQ or the Qs. And as we look here to QQQ or the Qs, what we notice that we are now throttling our 50 monthly. S&P is actually outperforming QQQ in the short term And I say that because of levels being reclaimed. If we now think about what we just mentioned with the Thursday levels with SPY, QQQ just barely poked over it, 270.17. And then for today, we got 270.24. So with that said, if you enjoyed today's video, I would really appreciate if you could smash a thumbs up, drop me a comment, and if not, there will be a video that queues up here in a moment for the weekend deep dive, which gives you a deeper look into my thoughts on how we got here, where we could go. And otherwise, thank you so much for watching. I look forward to seeing you tomorrow. Thank you.